everybody. Welcome to the Trading Market Technicals Morning Call video for Tuesday, March the 19th. Markets actually had a big down day early on and actually recovered most of the day to be positive on the day, and then markets sold off close to the end of the day. Nasdaq down 11, S&P down 8, Dow down 62. Gold actually had a decent little move up higher. So that safe haven flows came in, and also the dollar was actually up at one point and sold off down 12 cents. We have that Cyprus-related turmoil that appears to be abating for the moment, and although there is little evidence of any type of resolution, they're talking about now changing their tax on deposits. No matter how you slice it, it's just very bad news for the small guy. And is there anything else out there that could be brewing? And that's really what the bottom line is. And I mentioned many times about holding positions, and that's why I'm not really looking to swing any type of positions. At one point, the S&P around 1:30 in the morning was down about 22 handles. So that would have been a big ouch if everybody was holding a bunch of long trades. And that's why I said there's so much risk out there. And although there's extreme complacency and everybody says it's a big bull market, and that might be so, but who wants to come into a day where the market's down 20 handles and all of your hard work during the course of the month is wiped out on one morning? So that's why I'm looking more into the short-term time frames. Maybe an occasional swing trade into the overnight session for the next day because the stock either closed strong or weak depending on what my position was. But you really don't want to be getting involved with something like this, not now anyway, unless you really work in a big size book and you have a lot of room you have a lot of wiggle room on your positions. But nonetheless, I have a 5-minute chart here, and I just want to show you we have two good reference points here. Right, we have Thursday's high at 156.80 on the spiders, and then we have our low from yesterday, 154.18. This is going to be our range, guys. This is really what we're going to be looking for and working off of our range to see what's going to happen. Now, we have FOMC starting today and into tomorrow. I don't really think much is going to happen because this is ever so important coming into these FOMC meetings because of the fact of what we have going on with QE3, right? And the POMO auctions and $85 billion of assets being pumped into the market. We want to hear something to say, well, markets are getting better. We might be starting to taper off our asset purchase program. That's what you want to hear, and that's what the markets are going to react to the downside. And that may change the trend here right now. So we do have a continuing stock market that are buying dips, and buyers of dips are getting rewarded until that doesn't happen anymore. So that's the key thing that we want to continue to watch for. And that's what I said, watching to see what happens. And usually when you get a big gap down or a big gap up, it's very hard to trade something like that unless you look for trades that were the opposite counter trend, and since we did have a big gap down yesterday, I was talking about getting long stocks early on into the morning session, and a lot of guys did actually did okay buying stocks early on for a bounce trade. Next thing I wanted to point out is the VIX. The VIX was sharply higher today, and we did have, despite a moderate stocks comeback in stocks, copper broke support really bad. I'm going to show that to you in a moment. We definitely are oversold in the copper, but this thing just really broke down. And also, we have downtrends in EEM and the FXI, which I showed you yesterday, and we have a high sentiment. Bullish sentiment. So that's a recipe for disaster for the bulls. So I think that we're going to probably lull in this range for a couple days, and then we're going to see what happens. Now, if they test the highs again, I think that'll probably give us a great shorting opportunity. And then we would look to really get short the market. But until then, we need price to tell us what to do. We want to see price on the charts start to make lower highs and lower lows. And that's the only evidence that's going to give us. The indicators are secondary to price, and even though the indicators saying, hey, we're overbought, we're looking to roll over, that's just going to guide us on where price is going to be on the charts, okay? So that's really what we're looking for. Okay, now, Dow Jones and the industrial average and the transports, they were in positive territory briefly. So what I think really has happened is that the market's pushed higher, and I think big money sold into that, and that's really what I'm looking for. I do think big money sold into price yesterday just so they can get out of a lot of their positions. So we'll see what happens going into the next couple of days, but tomorrow is going to be a big day no matter how you slice it in Bernanke's statement. I'm going to dissect that statement really, really, really well to see if there's any type of clues that he's slowing his asset purchase program. Okay, real quick, I'm going to run through some of these charts for you guys. I don't really have too much because we just really are in these ranges again. But I want to show you the VIX. Here's the VIX. We had a big gap up in the VIX, and I did say we're going to have a volatility trade soon. If the VIX starts to pull back in again and holds this area, I'd like to even see a big flush lower, and then I would like to buy that VIX. We're at 5-year lows. I don't see the VIX going much lower here, at least in the short term. NYMO, we have a NYMO, really nothing going on here, guys. And I show this to you almost every day because it's really a great indicator, but we're just really chopping around here. NYMO actually sold off yesterday because of that bounce. And here's our S&P, as you can see on our line chart. FXI China, and I said to you, watch out, and this is not good. This is definitely not what you want to see. China should be way up here leading the S&P, and it's not. Catching a 200-day moving average. Now, we are oversold, so we are due for some sort of a bounce. But look at our ratio chart here. Here's, you draw this downtrend line here, which I'll do tonight. We want to see this thing really start to pop up and move higher if, in fact, we are in a raging bull market. Here's the EEM emerging markets. Not looking too pretty here at all. So lots of red flags here. Now, that could change, and that's not a sell signal to say, hey, we got a market top. I'm not looking to call a top and or a bottom in any sector. I like to follow the trend and get the meat of the move. And as you can see here, same thing with our ratio chart of EEM and the SPX. We are much lower here. So just keep an eye on this. This is very important. Look at copper. Now, copper broke that trend line. I kind of move this trend line back down here to this big cluster because we were here at one point, if you remember, and we were just kind of hugging the bottom. But now I'm going to move this lower. This is a very bad candle. Today we want to see copper at least recoup some of this big loss here. Otherwise, copper could be a big flush, and that's going to be a big sign for the markets here. Not good. This is definitely not a good sign at all. Okay, now let's take a look at the dollar. Dollar here. Right back up again. We were down 2 days. Dollar broke back up, and again, that's probably for safe haven flows. People not looking to do anything, and everybody that's in Europe are looking to flee and get their money out of Europe. And where are you going to put it? You're going to put it at the almighty buck, and that's really what's going to happen here. And until that happens, and we're going to have copper, precious metals, commodities, they're going to still be soft here until something changes, whether there be relationship changes and or the dollar starts to move lower. So this, keep an eye on the dollar, another really good indicator intraday, as well as the euro. And here's that 5-minute chart. I just wanted to show you. Write this down, 156.80 the high, 154, call it 154.20 the low. And these are going to be our two main points that we should be working off of for the next few days. Okay? Just go run into the daily chart. Here's GDX. Dollar was up about, I'm sorry, GDX was up about, gold was up about 10, 12 handles, and GDX was up about good 40, 45 cents, and sure enough, closed up very, very small here. So needs a lot of work here. Again, this is my so-called inverted head and shoulders pattern. 130, 38.20 is really what it needs to do to really get this thing going to the upside. I do feel it's in the cards, but I don't know when that's going to happen. So right now it's holding that right shoulder. This is okay, but we need more evidence. We need to really break out that 38.20. Here's the spiders. Sold off, came back up, went to the bottom of this little channel here. And virtually all of our indices did the same thing as well. So we'll see. If anything, we look for a 20-day pullback to the 153.25. But remember, we have our targets in mind here, 156.80, 154.20. That's going to be our reference points for the next few days. And here's our 60-minute chart. As you can see, Friday we had a little gap down, recovered, gap down lower on the Cyprus News, came all the way back up, filled the gap, was actually positive on the day, and then sold off hard into the close. That's where the big money was selling, no question about it. That's the big money lighting up their load. And here we go, Spider 30-minute chart, as you can see here. Guys, we broke down a little Friday, came down Sunday, hit S3 support, and then bounce back up to sell off at the end of the day. So we are still in this long channel, this last 5, 6, 7 days of sideways consolidation. Yesterday was so great to see a little volatility. So I do see, and I mentioned over the weekend to a few people that I do see volatility coming to pick up in the coming days and weeks. Sure enough, we did get that over the weekend. Now, I don't know if this is going to be a one-hit wonder, if buyers or dips are going to come in. Only time will tell. Okay, and here's the S&P cash daily chart. Look at our CCI came right back in again, down below the 100 mark. We actually tested this. Look right to the penny, 1544.86. All right, and our resistance is still going to be 1555. Our target is 1575. That's the all-time high. Okay, and then we have some movement down here. And now look at this 1530s coincide nicely with the 20-day moving average. So something to keep an eye on. We need to see where these levels are and where the price is going to take us. Transport's still on fire. Actually was positive on the day as well, and then actually sold off a little bit to the end of the day. But again, still holding its momentum average, its 8-day momentum average, as where it continues to hug price. We're way down here at the 107.57 for the 20-day moving average. My guess is we get any type of pullback, we'll probably look to test the 20-day. Now, if you want any type of reversal, we really got to get below and close below the 20-day moving average in all of these indices. And here's the IWM, same thing with the IWMs, very similar. Here's the 20. We got to really break below the 20, guys, in order for us to get some sort of a trend change, at least for now. Diamond, same thing as you can see here. Now we're just looking to kind of chop along. We did break up. We fell right back in Friday and Monday. And let me just put this out right here. There we go. And then we got this little sideways channel here. So we're looking to break below lower. Again, my guess, we're looking at the 20-day moving average will be the first target if we decide to pull back here. Let's talk about Apple real quick. Apple had a great day yesterday. Probably one of its best days I've seen as far as price action in a while. We did get that pullback on Friday. We had this bullish falling wedge that I wrote, this mini wedge here within the larger trend channel, and we broke back out of the 20-day, and we followed right through. Didn't even care about Cypress. Really, really nice trade. Now, again, this to me is still a trade. Okay, I do see that there's probably further more downside unless this can really get going. Then I could say, hey, maybe that 420 is the low. But right now, I could probably see a little more downside, probing, at least, if you will, in Apple. But right now, for a trade, like I said, if you wanted to buy it down in this area or buy a break above it, you're in the money right now. So just manage your trade according to your risk plan. And then lastly is the Qs. Now, the Qs broke back this lower channel up in here and broke back into this larger channel here that we've been in since January. Now, this here is interesting. So I like to see the Qs now regain a little momentum or even come back down into this area. This is where I'm looking to buy Qs, right up in here. I would buy Qs in the low end, anywhere up in this area, 66.50, 66.80, even 67. And then for a trade, obviously your stops would be below the 200-day moving average. All right, guys, that's really about it. Remember, FOMC meeting today and tomorrow. He comes out with a statement tomorrow, and the Bernanke will be speaking as well. Earnings season starts up in a couple of weeks. I am very excited about that. That's going to put some volatility and some great trades in front of us. All right? Be nimble. Cash is a position. When in doubt, remember that. I will talk to you tomorrow. Have a great day today.